Good morning to everyone joining us from BC and good afternoon to our speakers connecting from London. Welcome to our today's webinar on trading with the UK, what now post-Brexit. To begin with, I'd like to acknowledge that I'm speaking today from the territories of the Gungan-speaking people, the Esquimalt and Sanghees First Nations. And I'm thankful you're able to attend today from the territories and communities in which you live, work and play. The topic of today's webinar, Trading with the UK, What Now Post-Brexit, has been on the top of mind for many businesses around the world lately. We decided to provide you, businesses operating in British Columbia, with the latest insights into the current and forthcoming trade framework, financial solutions and business opportunities in the UK from Canadian and BC perspective. My name is Gunna Solutions. I'm manager in the Trade Policy and Negotiations branch, BC Ministry of Jobs, Economic Recovery and Innovation. I'm joined today by my colleague, Benjamin Kaliznik, in the same branch, who will be helping us with the Q&A sessions later, and our distinguished guests, Nicole Davison, British Consul General to Vancouver, Rupert Porter, former British Consul General to Vancouver and now Managing Director, Europe Trade and Investment Representative Office. Melissa Arsenault, Operations Manager in Rupert's team. And Christopher Thiparaj, Senior Account Manager in BC, Vancouver Island region with Export Development Canada. So before we get started, I'd like to go over the agenda and a few housekeeping items so that you know what to expect and how to participate in today's interactive session. So the webinar will last approximately 1 hour and 30 minutes. There will be 3 presentations in total. We will start with the opening remarks by Consul General Nicole Davison, and we'll move to a quick intro to Canada-UK Trade Continuity Agreement. And then we'll move to doing business in the UK, recent trends and how BC Trade and Investment Representative Office can help you finding partners and increase your presence in the UK. These presentations will be delivered by Rupert and I, and will last approximately 40 to 50 minutes in total. We will then move to Chris' presentation on trade financing, export credit insurance and risk management solutions by Canada Export Credit Agency, Export Development Canada, known as EDC. We will have a live Q&A session starting towards 10:05. You'll have an opportunity to submit text questions to presenters by typing your questions into the questions pane on the control panel at any time during the webinar. If we run out of time at the Q&A session, we will follow up with you individually. And you may also wish to explore the handout section of the GoToWebinar, and you'll find there today's presentation deck and information on Canada's International Free Trade Agreements application in different sectors. And lastly, we are recording the webinar, and you will receive it in follow-up email along with today's presentation. So without further ado, I now pass the floor to Nicole Davison, British Consul General to Vancouver, for the opening remarks. So Nicole, the floor is yours.
Great, thank you very much, Gunna, and it's great to be able to join you and others today on this session to talk about BC's trade and investment relationship with the UK now that we've left the EU. I just wanted to take 3 or 4 minutes to kind of set it into a little bit of context, Vancouver, and we also work on trade and investment between British Columbia and the United Kingdom. So what we do here at the consulate is we help Canadian companies who want to set up in the UK and work with British companies who want to trade into Canada. But when dealing with Canadian companies who specifically like to explore a trade relationship with the United Kingdom, we work very closely with my colleagues who are on the line today so that we have a very holistic relationship and make sure that nobody falls between 2 chairs. So as an overarching point, I'd like to say that from our perspective, the UK is obviously still a very strong trade and investment partner, and there are many factors that support that. We still rank in one of the top 5 countries in terms of global innovation. We're one of the strongest economies in the world, although like many others, we are taking a post-pandemic hit. But we do have a fairly optimistic outlook on what post-pandemic recovery will look like. We have a substantial talent pool, we have a very strong legal system, competitive labour costs, and a very vibrant tech ecosystem. So we still are in a very, very good place to attract trade opportunities and investment opportunities into the UK. We have a trade continuity agreement in place with Canada, which was agreed post EU departure, and consultations are now underway on taking that to a more enhanced free trade agreement between Canada and the UK. And formal negotiations on that will likely start around September. And what we hope, and it's very much the will of both sides, is that we will see a substantial reduction in tariffs and duties. And in addition to tariff reductions, there are also going to be a lot of other elements which is going to make this a very advanced free trade agreement, which will look at things like the green economy, women's economic empowerment, indigenous rights, amongst other areas. From the UK perspective, we've also announced our intention to accede to TPP, and that's received support from all member countries. And the UK's participation in this multilateral trade agreement, which is very much focused on Asia and the Pacific, would also expand the impact of any agreements that we have and significantly increase the trade bloc's annual GDP. And of course, British Columbia and its position on the Pacific Rim is very appropriate in that conversation. And one of the last things I wanted to mention that's a big, big priority for us this year is our hosting of COP26, zero emission vehicles, green finance, nature-based solutions, adaptation and resilience. And we are looking at all of those in a political context, but also in a business context, and working with businesses, including Canadian businesses, to significantly increase the level of ambition around climate change and emissions targets. And we see business as being key to that delivery, partly because of the economic power that businesses have with government, but also because it's something that investors expect, customers expect. So one of the key things that we'll be working on here is around raising Canadian ambition on that and getting more and more Canadian businesses to sign up to pledges like Race to Zero. So I'm delighted to be able to join you today. I very much look forward to seeing how this conversation unfolds. I know the focus is significantly on trade into the UK, so I'll hand over to my colleagues who have a lot more to say about Q&A afterwards. So thank you very much.
Thank you so much. Time of presentation, and we'll also turn to Canada-UK Trade Continuity Agreement. Trade Policy and Negotiations branch I work in represents BC interests in free trade agreements negotiations and trade disputes that affect BC. And we also work to increase businesses' awareness and of the opportunities in free trade agreements and assist you dealing with the trade issues you might be facing. So in my today's presentation, I'll briefly mention the role of our ministry and Canada's free trade agreements before moving to the Canada-UK Trade Framework and Trade Continuity Agreement. Then I'll mention some opportunities it offers for BC companies like you, as well as the UK-EU Trade Cooperation Agreement. And I'll try to keep it fairly high level, so it's not too technical for you. So let's start with this slide about our Ministry of Jobs, Economic Recovery and Innovation. Some of you might have already seen it in our previous webinars on Canada's free trade agreements. It essentially explains why we do what we do. The Ministry of Jobs, Economic Recovery and Innovation aims to make life more affordable for British Columbians by building a strong and sustainable economy and improve the standard of living. Here we normally show a welcoming video of our Minister of State for Trade, George Chow, and he fully endorses and supports info sessions on Canada's free trade agreements. We assist you, BC businesses, to be aware and to leverage export opportunities and market access opportunities found in Canada's free trade agreements, of course. And we do this through a variety of programs like Export Navigator that provides free support and ongoing guidance to help your business grow outside of BC. And I know there are several Export Navigators on the line today. And we also have BC in-market representatives like Rupert Porter and his team in Europe, but we do also have them in a number of markets globally. We want you to succeed in your export journey and diversify your export markets. And that's why we focus on providing you support and having your back when you do business outside of the province, domestically and internationally. So Canada is a trading nation, and we now have 15 free trade agreements that cover 49 countries. Those agreements give you access to about 1.5 billion potential consumers worldwide. And this map shows you where in the world Canada currently has those free trade agreements. They are marked in blue. Some of the well-known are CUSMA, Canada's agreement with the US and Mexico, CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership that is currently in force between Canada, Japan, Singapore, Australia, New Zealand, Vietnam, and Mexico, and the one that Nicole has just mentioned that the UK has already expressed an interest and sent the official request to join to. And of course, the CETA, the Canada's Comprehensive Economic Agreement with the European Union. The UK was initially part of the CETA, and this agreement stopped applying to the UK when it left the European Union on December 31st, 2020. And I'll go into more details shortly. So why doing business in the UK? The UK is the second largest market for BC in Europe. The UK is also our 8th largest market globally. It is a really important and historic trading partner for both BC and Canada. We speak the same language and our political and legal systems are similar. And there is a long-standing trade relation between BC and the UK. And there is a comfort feeling of coming and doing business in that market. And even despite the last year pandemic, BC's exports to the UK actually showed a slight growth. So what is the Canada-UK trade framework right now? So up to date, the CETA applied to the UK for a bit more than 3 years. And CETA is still a very important agreement for Canada and BC, and it continues to apply to 28 EU member states and provide stability in trade. As Brexit was looming on the horizon, Canada's and UK's prime ministers discussed a need for consistency and seamless transition for Canada-UK business. And then there were some delays in negotiation of what is now called Canada-UK Trade Continuity Agreement. And Canada and the UK signed this agreement on December 9, 2020. And there was not enough time to put it through Canadian ratification process. So to ensure that there is no disruption between Canada and UK trade, there was an interim measure known as the Memorandum of Understanding. So this Memorandum of Understanding was put in place and applied from January 1st, 2021 to April 1st, 2021. And it covered only market access for goods. So from April 1st this year, the Canada-UK Trade Continuity Agreement, TCA, entered into force, and it is highlighted here on this slide in yellow. So this trade continuity agreement is not a brand new trade agreement, and it essentially rolls over CETA's benefits, and its role is to maintain the CETA benefits while Canada and the UK negotiate a new proper trade agreement. So when the UK was still part of the European Union, it could not negotiate its own free trade agreement. And now, since they left the EU, Canada is keen to negotiate a proper agreement that focuses on strengths of both countries. For example, digital trade, trade and services, to make sure that this agreement becomes of a mutual benefit. You might have heard that the UK has also submitted a formal request to join the CPTPP, which Canada is also a party to. And the government of Canada is actually currently running a public consultation on future trade relations with the UK for both bilateral and multilateral levels. And I encourage you to check out this link on this slide. It's also available in your handout. And provide your feedback and the public consultation that was launched by the federal government. This consultation is open until April 27th. And if you wish, you can also submit your feedback directly to my email after the session, and we'll make sure it is received as part of the BC response to the federal government. So following this consultation, Canada and the UK will start negotiating future trade relations. Both have committed to begin negotiations for a permanent bilateral free trade agreement within the first year of its entry into force, of the TCA entry into force. And while the TCA does not expire, there are some key market access elements that will expire after 3 years and will create a strong incentive for both parties to discuss the permanent deal. So now let's move into what TCA covers and its implications for you. So the TCA maintains 98% tariff elimination on BC and Canadian products that are exported to the UK, and this is the same as under the CETA. So this the tariff reduction and tariff elimination does not change. So with this purpose, there was a UK tariff that was introduced by CBSA, and you can check it following this link as well. So the rules of origin provisions are also the same, but you will need to fill in an origin declaration as opposed to the CETA certificate of origin. And there is also a link that will show you how to do that. So if you're importing from the UK, you can still use the European Union materials and processing in your imports to Canada. And there are certain conditions to that cumulation, and provisions will expire in 2024 unless revised and extended. So the sanitary and phytosanitary commitments of the CETA are also maintained in the UK TCA. The TCA fully protects Canada's dairy, poultry, and egg sectors and provides no new incremental market access for cheese or any other supply managed products. Some agricultural and fish and seafood goods are subject to tariff rate quotas under the CETA, were also carried over with the new volumes, and I'll come back to that in a few moments. So under the CETA, beef, pork, and wheat TRQs are administered under a licensing system, and the UK was not able to replicate that system. So instead, these products will be administered on a first-come, first-served basis under the TCA. So provisions for trade and services procurement remain unchanged from the CETA. And the investment dispute resolution provisions are suspended pending a review by both Canada and the UK. And this is because the provisions were not part of the provisional CETA application. So they say that Brexit is not a moment, and it is a process. And since January, there has been some delays and frictions at the customs borders, some duplication of information and forms. And companies report that 3 days of at the customs border before turned into 5 days now. But I'm sure that Rupert will be able to provide more insights on that. And of course, there are some other trade-related Brexit implications that are not part of the TCA itself, but are worth considering. So there were changes to customs forms from the CETA, and Canadian and BC exporters and even online marketplaces need to register to submit the UK VAT now. If you export animals or animal products to the UK, you'd want to note that export health certificates for animals and animal products were extended until June 30th this year. After that, you'd need to fill in the certificate on the Great Britain form, GB form, unless you export your products to the Northern Ireland that maintains the EU export health certificates. And Canadian Food Inspection Agency, CFIA, will advise you on the specific form. The UK is now a third country for the European Union, and that's very important to keep in mind because some commodities require transit and re-export certificates if they are transiting through the UK before arriving in the EU countries, or if they are being imported into the UK first before being re-exported to the EU. This works the opposite way from the EU to the UK as well. And we've heard of some consignments of seafood destined to Austria being caught for 3 months in the UK. So that might be the case where a transit certificate was required. So some of you have been asking about pest analysis and phytosanitary certificates and systems approach for fruit exports. It is still to be seen what approach the UK will adopt, and we'll advise you on what we hear from the CFIA. Oops, sorry. Meanwhile, some time ago, the UK has also introduced a peach system for plants and fresh produce imports, and you might wish to explore it following the embedded link here on this slide. There is also a change from the CE product marking to the UKCA version. And if you need to put that CE mark for your product when shipping it to the European Union, this means that now, if you ship it to the UK market, you'll need to comply with the UK legislation and put the new mark. If you ship to both markets, to the UK and the European Union, you'll need to comply with both legislations, and you need to have both marks on your product. So UKCA marking came into effect on January 1st this year. However, to allow businesses time to adjust and to adopt to the new requirements, you will still be able to use the CE marking for the UK market until January 1st, 2022 in most cases. And on the positive side, the UK-Canada Organic Equivalence Agreement came into effect on January 1st, 2021. And the arrangement allows organic products certified under the Canada organic regime to be sold and labeled as organic in the UK and vice versa. So these are just some of the implications to consider, but this is by no means is an exhaustive list. And if you have been doing business in the EU and thinking about doing business in the UK, just consider acquiring a legal advice or engage a customs broker, freight forwarder, or logistics provider, or reach out to Rupert and his team or to us, and we'll do our best to help you. So on this slide, I'll talk about the origin quotas, and origin quotas are something that is often overlooked by many, and that's why I wanted to highlight it today. I assume that you know about the rules of origin. So this is the share of domestic or Canadian content that needs to be present in your product in order for it to qualify for preferential tariff treatment in markets where Canada has free trade agreements. You attest to it in your certificate or declaration of origin, and it is specific to each product and to each free trade agreement. But you might ask what to do if my product does not qualify under rules of origin. And here are some categories of products that, even when not qualifying as originating, can still enjoy zero tariff up to a certain volume per year when shipped from Canada to the European Union and now to the UK. So these are called origin quotas, and they are renewed on annual basis, and they will actually help you save some costs. The good thing for you here is that with the UK that have left the European Union, this quota under the CETA, under the agreement between Canada and the European Union, the quota was not reduced. And the TCA quota was added on top. And highlighted in yellow here on this slide is the existing quota that BC companies have been using quite successfully when trading with the European Union. And in green, the quota that's been added in Canada UKCA. So as you can see, there is a wealth of opportunities that can be explored within these categories that are already in use or in some underutilized categories, such as sugar confectionery, dog and cat food, textiles, and seafood. So just a couple of words here on the UK-EU Trade and Cooperation Agreement and its importance for Canada's and BC trade. So Brexit has resulted in changes to the UK-EU trading relationship and how goods cross the UK-EU border. And this is because UK is no longer part of the EU single market, customs union, and free trade area. EU and UK are rewriting everything in their trade, and in fact, this EU-UK Trade and Cooperation Agreement is the first trade agreement that constricts trade as opposed to liberalizing it. So from January 1st, 2021, UK-EU has been determined, the trade between both countries has been determined by each party's international commitments, as well as this UK-EU Trade and Cooperation Agreement. So goods traded between the UK and the EU countries have no tariffs or quotas attached, but otherwise they are subject to the requirements that are normally imposed on goods from third countries, along with checks prior to importation. And this is very important to keep in mind, as it is relevant to customs, VAT regime, SPS measures, among others. And most of frictions for moving goods were observed from the UK to the EU until now. And this is because the EU applied new requirements from January 1st. This year, and the UK is phasing out those requirements for the shipments from the EU, and it means that the EU shippers will encounter similar issues from spring or summer this year. So the Northern Ireland Protocol was part of the UK-EU agreement, Brexit agreement, and it is put in place to protect peace on the island. The protocol affects you if you move goods in and out of Northern Ireland, and it is meant to keep actually the land border between Northern Ireland and Ireland open. That is why the border checks for goods are now happening in the Northern Ireland ports. So if the goods enter the Northern Ireland from the outside of the UK and the European Union, in a very broad terms, one pays UK VAT if goods are not at risk of onward movement to the European Union, and one would be subject to the EU VAT if goods will enter the European Union. But for services, of course, it's more complex than that, and I'm sure that Rupert will also vouch that this is a very complicated matter. So I'm going to stop here and just reiterate that Brexit is still very much a process, and there are many phasings, expiring deadlines, and possibilities for extensions and revisions that are associated with the trade agreements. So if you are planning or already exporting to the UK, moving your goods from the UK to the European Union and vice versa, we advise you to seek the advice or reach out to us. And we can assist you or introduce you to people who can help you. So before I wrap up, a few words about how to easily look up tariffs for your product. So some of you might have already seen this slide. This is a screenshot from Canada's Tariff Finder website and is a handy tool for figuring out what sort of tariffs your products will face in a market, or what tariffs you would pay when bringing a good into Canada. So it's a fairly user-friendly tool, and it is specifically designed for the markets with which Canada has free trade agreements. All you need to begin is the market you're interested in and the product you want to export or to import. And you can find your product either by HS code or by a keyword. So I encourage you to check this tool. And of course, last but not least, here is a website where you can let the Trade Commissioner Service know about a trade barrier that you are facing. Trade barriers take two forms. They can be tariff and non-tariff. And trade barriers, non-tariff ones, they include administrative procedures, quantitative restrictions, such as quotas, for example, price controls, licensing requirements, and products labeling requirements, for example. And it's important to remember that not all regulations and procedures are considered a trade barrier. And some regulations really make sense, while others are probably a real barrier to your trade. So when you face a legitimate barrier through this website, you can easily report them. You may think that others are probably experiencing the same barrier and have already raised it, and there is no sense in reporting it again, but that's not necessarily true. And even if the barrier has been raised already, it's helpful for the federal government to get additional details and to know how many businesses are affected by this. So I know it's been quite a few of technical slides here and a lot of information in this short period of time. And I hope it was not too technical. So if you take just one thing away from this presentation, I hope that if you have any questions about Canada-UK trade agreement or any other Canada's free trade agreements or how to use them, get in touch with us. And now I pass it over to Rupert, Managing Director for Europe Trade and Investment Representative Office, who is joining us from London today for his update. So Rupert, over to you.
Super, thanks very much, Gunna. And it's great to be joining you all. Thanks very much for listening in, and I hope that I can talk you through a little bit about what we do, what we're here for, and how we can help. A little bit on the trade arcus coming into the UK and Europe, although Gunna's covered a fantastic amount of detail and information. The UK economy and the sort of trends that we're seeing, which we think present opportunities, as well as I may sort of cover a little bit on the European Union side as well in that. And then finally, really the sectors where we are focused, where we put most of our effort and understanding and where we can help. But as I'll cover, that's not a sort of limited list in terms of reactive. So if there are questions that fall outside that, we're happy to look at them or consider them and support businesses that are not in those specific areas, but I'll come to that. So if I could have the next slide, please. Thanks very much. So this is who we are, your team in Europe. We are based primarily in the UK, but as you can see, we have a colleague in the Netherlands and another colleague in Germany. We do operate across the whole of the European market, though, and operate on a sector basis rather than a geographical basis. So wherever we're based, we lead by the sector and go to the specific part of Europe as needed to support the businesses. So that's the way we approach it. That said, having someone specifically in the Netherlands, specifically in Germany, and then the majority of our team in the UK speaks to where we see most traction and most of the trade and investment. And so it also gives us a little bit more of an on-the-ground understanding of those markets, which is why we are positioned the way we are. As you can see from the team as well, as I say, I'll come into more detail on the sectors that we cover, but that gives you a little bit of a snapshot of those sectors up front before we come to them in more detail later. All of the team support both investment into BC from Europe, attracting, encouraging, and helping companies looking to establish or invest in BC. But more importantly for this conversation, we support BC businesses looking to export, access, and succeed in the UK and the EU markets. As Nicole said at the outset, quite rightly, we try and work as a holistic team. So we work very closely with the UK consulate and with some of the other European consulates in BC, who are obviously looking to support their exporters into BC or looking to attract investment, aware that often one leads to the other and is part of a whole process. So in some ways it's an artificial line, but it's the best way that we think that we can provide support and assistance that benefits the economies that we're representing. The other partners that we work very closely with, particularly on the trade side, are the Canadian Trade Commissioners. As you can see from the scale of our team, as opposed to the scale of the European and UK markets, we are small. We try to cover a lot as well as we can, but understanding on the ground, particularly in some of the European countries, for example, which we may not know as well, we work very closely with the Trade Commissioner Service too. So you may, if you contact us directly for anything after this or have done so already, you may find that we work in partnership with them too in terms of doing what we can to support you. So that's the team. You can get in contact with any of us directly depending on your sectors, but if in doubt, come through me, or in fact, one of my colleagues is on the line, Melissa, who, as you can see, basically keeps us all running, as well as leading and supporting on the agri-food sector. So do come to either of us, and if it's not us, we can certainly point you in the right direction. Thanks. So next slide, please. Gunna covered a lot of this, so I'll only be very brief, but certainly this is the way we also view the trading architecture that hopefully mostly helps BC companies into the UK and Europe. CETA was covered, as was the Trade Continuity Agreement, and even touched on as well the EU-UK Trade and Cooperation Agreement, which, whilst not obviously directly signed or involving Canada, affects Canadian companies looking to trade with those markets where they're looking to trade with both. I won't go into details on this slide in particular, as I say, because I think Gunna covered it very, very well in her presentation just now. So I will go to the next slide, which covers a little bit more on the impact, if we can. Thank you. So in very broad terms, what this means for BC, what that architecture means for BC, is those exporting to EU countries only, as I think came through, there's a lot of continuity. Things are basically the same and you're operating under CETA. Those exporting to the UK only now do so under the TCA. Forgive me that's not under the MOU. I'm going to look both prepared and unprepared all at the same time when I say I put this just before the TCA came actually into force at the beginning of this month. So ignore that sentence. It is now under the TCA. And then longer term, potentially full bespoke long-term agreement, which has also been covered. So exporting to the UK only, in a way that is technically still as straightforward as it was, but it's now under the TCA. And I say that because the measures have been carried over from CETA into the TCA for the most part. But within that, you obviously now have to do the UK equivalents. Where things become a bit more complicated are in the next two. So if you're exporting to both the EU and the UK, or transferring goods between them, then you find that the three agreements that have been mentioned all potentially have an impact. So the regulatory requirements, by and large, are the same for both at the moment, in terms of the technical specifications and what's required. But the paperwork differs, VAT and customs, and particularly if you're transiting, then you have to sort of consider both forms of paperwork potentially, and making sure that the goods don't get held up in one or the other. An example has already been mentioned of that. Longer term, the other issue to think about is, at the moment, while there is regulatory alignment, one of the things that can potentially happen post-Brexit, of course, is that the UK and EU can diverge on their regulations and requirements. Whether that's driven by either EU or UK domestic demands and the desire to evolve on a regulatory basis, that can start affecting more sectors and more categories of goods that come into both markets. The last one I've included here, establishing or managing an operational presence in the EU or UK. Really, if you're looking to manage investment manage business within Europe or within the UK by establishing a presence, you now need to consider your primary market, primary objectives. It's certainly still doable from one into the other, but you'd obviously need to consider travel, movement of your goods and services, and whether you're trying to tap into one market or the other or both, and what that means for your investment footprint as you go. I've put in the caveat, these are general principles that apply to all businesses. It very, very quickly, as you will know, goes from the general principles that you have to consider to very niche specifics that apply to your business. So that is again where we can come in and try and talk you through those. So there is now quite a bit of complexity to navigate, but on the positive side, the agreements that have been put into place, most recently the TCA, provide a lot more continuity than would have been otherwise the case. So we're in not a bad position. Thank you very much. Next slide. So looking at the UK market and where there's potential, how it's looking at the moment, obviously have to start by looking at the COVID impact. 2020 was a very difficult year, as you'll have seen from the news, for the UK and Europe and many other parts of the world. There are some figures there and notes just about the measures that we're taking, that have been taken. On the positive side, the number of cases, the R rate, have been diminishing in the UK. The UK is also going through rolling out particular steps to ease the lockdown restrictions that were in place. We've just been through the second step on April the 12th, and there's another step coming in mid-May and another after that in mid-June, all predicated on the numbers of cases and the R rate being where the government and medical health advice wants them to be. But so far, so good. There is definitely a sense that the UK is coming out of this without getting complacent, obviously, because vigilance is going to have to be the word through this year. Part of that is a result of a very strong vaccine rollout, more than 32 million, which is going very, very well. So I think that's helping reassure too. And the last bullet point, just under COVID on the aim, I should make clear that that's very much my own, it's probably, I hope, better more than a best guess, but projection about how things will evolve. And what I mean by that is, through spring and into summer, we are still running pretty much everything we do virtually. There's still very little travel, even to a degree within the UK, but certainly internationally. What we hope to see is that come the fall, that travel and openness starts to be able to return, and that we can start working with clients a little bit more in person than we have done over the last year or more. Economic conditions, as with the UK, as with much of the world, last year was a very difficult year. Strong, big GDP downturn. Specific sectors mentioned there: travel, hospitality. You could also add entertainment, sports, arts, and so on, all very badly hit. Some sectors, though, adapting, and particularly adapting as the year went on into this year. I think the ability to handle the changes, businesses have responded remarkably well in their ability to get better and better at adapting to the new world. And consumers have adapted too, obviously, which has then affected business. So a lot more online, groceries doing well, whereas obviously restaurants have found it very difficult. ICT, I could include medical technology and so on, lots of business going on there. Projecting forwards through this year and onwards, there are legacy challenges to be dealt with. Again, as with the UK, as with elsewhere in the world, the decrease in investment last year, decrease in consumption, there is certainly a way to go. Governments, including the UK's, have built up a lot of debt, completely understandably, in terms of shoring up the economy and making sure people keep jobs and businesses survive for when the return happens. What we're also seeing, though, is that into this year, that actually there are some very good economic indicators of growth through this year. So the stock market, I've put them there, commodity prices, property values, and activity being a key one, all looking very promising through 2021 and into 2022, which is good. So I'll move to the next slide. Thank you. Again, my own view on where some of the big opportunities are as a result of some of the big strategic trends that we're seeing within the UK, and these actually apply to Europe more broadly as well. For all that we can and need to talk about Brexit and trade agreements, actually there's a lot of sort of commonality in terms of prioritization and what is happening in the markets. You won't probably be surprised to see those three. As I say, they're my own take on where I think some of the big opportunities are. Climate change and environmental management is becoming a part of all business now. In terms of, I guess, the core of it around energy generation, energy efficiency, transportation, and moves to greener transport, greener energy, these areas are where a lot of the potential lies. The UK is very forward on climate change, both because it has been for a while, but also, as Nicole mentioned, because COP26 is at the end of this year, and has some robust action to take if it is to meet some very ambitious targets. That provides business opportunity, though, and I've highlighted a few areas there. Digitization, the same. A lot of move in familiar sectors to you that equally apply to the UK and to elsewhere in Europe. So the adoption of digital technologies in a lot of other sectors. These are very cross-cutting, both digitization and climate and environment. And then health, which is obviously more of a specific area itself, but I've mentioned the various drivers there. So aging demographic, having to respond to the pandemic and prepare potentially for new ones has forced adaptation and evolution in some ways in quite a remarkable way in this sector. I believe that's set to continue. So businesses in those sectors, particularly that are innovative, I think there's opportunity there. There's quite a lot that I could add in there that has not been included. So agricultural technology, forestry, I've touched on biofuels, but the broader bioeconomy, timber and so on. There are other areas too, but I think these are some of the big trends that I'd highlight. So, and we can get into those more if you wish to in the Q&A. So next slide. Thanks very much. So I will run through these very, very quickly. But as I say, I'm happy to sort of come back to any of the specific areas. So these are the areas, as I mentioned at the start, where we see a lot of traction. They vary in terms of the amount of emphasis that is placed on trade from BC into the European market and the amount of time we spend working on investment and investment attraction into BC from the UK and from Europe. But all of them to some degree involve both. So agri-food, for example, is not exclusively, but very heavily an export approach that we take. Whereas agri-tech, very much about innovation development, looking for innovative partners that we can bring to BC. Again, not exclusively though, because there's some very interesting innovation going on in BC, which has potential market traction in the UK and in Europe too. and I've mentioned forest and the bioeconomy as well. As I say, happy to come back to these. Next slide, please. Mining and energy, the sort of large resource bases out of BC, also very much important for the UK and for the European market. For mining, we do tend to be reactive, but we've certainly been engaged in some areas of that, particularly around capital investment into BC. London obviously still being and continuing to be an incredibly strong financial services sector, financial services provider into the mining sector and other sectors. So we do continue there. Energy as well, obviously for BC, LNG development, but more broadly too, and combining with clean growth, potential opportunities in hydrogen is one area that I'd highlight there too. But also some interesting technology coming out of BC on CCUS, so work there too. And clean growth, I mentioned it driving the UK context, but obviously also in BC with Clean BC. So I think there are real potential synergies there for us to work on. Next slide. I realise I'm whipping through these, but want to allow us time for a bit of questioning at the end. And these are the sort of the final sectors. Life sciences of health I've touched on, centrally important and certainly been a busy year and is looking set to continue to be. ICT, digital interactive media, BC's a large part of that on the back of both BC's strength in creative digital media, but also some specific ICT areas. The challenge there on an export basis, of course, being that the UK and wider Europe are very evolved markets. So you have to have something innovative and cutting edge, but certainly if you have, then it's open to that. And BC does have some good stories to tell in that, so very keen and happy to work on those areas too. Same for advanced manufacturing. I'm aware that last one's a little bit of a catch-all, but they all matter, and we work in different ways in all of them. So aerospace, for example, the first one, investment into BC, particularly with BC's strength in MRO and materials development, and then Vancouver, the port, third largest port in North America, so working on marine and the development of marine industry, particularly around ocean technology as well, where there's some potential interesting synergies between BC as well with the UK and Europe. So those are the sectors. And just to close off, next couple of slides are purely visual. Some BC companies which you will all recognise that are established and doing well in the UK. Obviously, those are the names, the headline sort of names. Beneath that, there is an awful lot of export and trade going on. Those are really the ones that are sort of established with large presence in the UK. And the next slide is the flip side of that. Lots of names you'll recognise that have UK HQs doing very good business in BC. Again, that doesn't speak purely to exports from the UK into Canada or BC, but some big names that are set up in BC, all of whom we work with to a greater or lesser degree. So I will stop there. I hope that has covered some of the key areas and key dynamics that we're seeing, but as I say, happy to come back to that in the Q&A. Thanks very much.
Thank you so much, Rupert. Thanks for this excellent presentation. We already see some questions coming, but we'll save them for the Q&A session. So now, without further ado, I pass it over to Chris Tiparaja, Senior Account Manager for BC on Vancouver Island region, Export Development Canada. So Chris,
Great, thanks.
The floor is yours.
Great, thanks so much, Gunna, and thank you. Good morning, everyone. Thank you for having the opportunity, giving me the opportunity to speak. And it's great to see the partnership between the various government partners coming together for the benefit of the Canadian and BC exporting company. EDC, sorry, I apologize in advance. You cannot see my face, so I'm having technical issues on my end, but that's not necessarily a bad thing. EDC is part of, as Gunna mentioned, the federal government. We are the country's export credit agency, and our mandate is really quite simple. It's to help Canadian companies grow outside of Canada. How we do so really falls into three main categories, and there's a number of ways that we do provide help that kind of spin off from those three main core topics. But for the purpose of this presentation, we'll stick to those three main buckets, so to speak, and feel free to engage me with questions as you see fit. So if we can move on to the next slide, Gunna. Our core solutions fall into three main categories: risk mitigation, working capital solutions, and market intelligence. So we do have some core products that are going to help you financially either continue to perform, or entertain new opportunities in markets outside of Canada. In the next slide, the first solution we have is the ability to provide insurance for you. Now, what this looks like is accounts receivable insurance. This is the ability to protect you, the Canadian exporter, against non-payment from your foreign buyer. The high-level benefits of the program really allows you to leverage accounts receivable insurance to gain access to more working capital from your financial institution. It also allows you to offer more competitive terms to your customers, and that's something that's becoming more and more relevant in today's global economy. And thirdly, it allows you to mitigate the risk of non-payment from your buyer and allow you to gain access to markets that you normally maybe wouldn't think about entertaining. Next slide, please. The credit insurance program really, again, mentions it protects your balance sheet. So regardless of the size of your receivable or the market you're going into, we have the ability to protect you by doing an investigation on your foreign buyer. We have offices across the globe, and those are our boots in the ground, and we do have an office based in London. And so we connect with them and our internal resources and conduct investigations on those buyers in that specific market. With that insurance, it protects you up to 90%. So in the event that your buyer in the UK or whatever market that you're going into does not pay you, you're going to recover 90% of the cost of that receivable, which is a pretty significant amount, and depending on the size of that AR, could have a pretty material impact on your business. The insurance itself is fairly flexible in that it allows you to insure maybe just the one-off sale that you have, and it allows you to customize it from market to market. Or if you are a robust exporter already who has a quite extensive reach into various markets or one particular market, and it will allow you to protect your entire portfolio. Point being is that it's a customizable product that allows you to pick and choose. And really, that's the benefit of having that, because it allows you to determine the cost effectiveness based on your business model. What impacts the fee or the premium on your insurance is the credit worthiness of your buyer and the market that you're going into. So the UK market is a market that we are quite comfortable with. And so premiums can range, I've seen as low as 0.2%. However, when you go into more challenging markets, such as parts of South America or Africa, the premiums may increase based on risk, as we take a look at not only the credit risk of the buyer, but market conditions as well, such as human rights violations, political risk, corruption, and things of that nature. At the end of the day, when you're utilizing EDC, you can ensure that we are making sure that you are not going to have the reputational risk of your company jeopardized in any way. On to the next slide. What mechanisms are covered? Well, what is covered under the accounts receivable insurance is if your buyer goes default, claims bankruptcy, if there's a risk of repudiation, as mentioned, political risk, export and import restrictions, so when borders close or ports close, and contract cancellation. What's not included is disputes. So if you, for example, ship a package of rice and you say that rice is brown rice and they get it and it's white rice, that's not a dispute. That's not an issue that would be covered to the insurance. Sales to related parties. So if you have an affiliate in the UK and you are selling it to your affiliate first before that affiliate then on sells, that would not be covered as well. Misrepresentation and corruption. So corruption is in the event that you, the Canadian exporter, or the buyer themselves has been flagged for corruption risks or violations, we cannot provide insurance on that as well. At the end of the day, we'll have a conversation with you based on your buyer and the need that you have. But if we cannot provide insurance in a particular situation, it may be reason to pause and reassess your relationship with that buyer, or incorporate some more risk mitigation tools on your end. Next slide, please. Bonding solutions is part of the second bucket I mentioned. So the insurance is the risk mitigation piece. The bonding solutions and the subsequent solution falls into our working capital solution. Now, we are not a bank, nor are we a lender. We rely on the Canadian banks and credit unions to drive that relationship. However, we have the ability to enhance their capabilities and take a little bit of the risk off their shoulder. Especially since COVID happened, the Canadian banking environment has tightened up a little bit and become a little bit more restrictive. And so our mechanisms here are kind of make ways for us to flex our muscle a little bit and get the banks a little bit more comfortable in lending. On the next slide, it talks about our bonding solution specifically. And this may or may not be relevant in your industry. But what this really does is, in the event you as a Canadian exporting company are required to post some sort of financial instrument, whether it be a standby letter of credit, a letter of guarantee, or some kind of performance bond, you typically will go to your bank for that instrument. Your bank will then assess the situation and require cash collateral to securitize that instrument. So, for example, let's say your buyer in the UK says, we would like a $250,000 letter of credit as part of this relationship. You go to your bank here in Victoria or wherever in BC, and your bank says, that's fine, we will issue that letter of credit, but we need cash. So they'll ask you for a cash deposit of $250,000, or if your company has an operating line of credit, they'll carve that out of your operating line of credit. That essentially has an implication on your working capital. You may need that $250,000 to execute on your contract or to continue ramping up operations. So we have a mechanism in our bonding solution where we instruct the bank to open up a separate facility that's independent of your operating line. And that facility is meant solely for posting letters of credit, letters of guarantee, and bonds. We backstop that facility 100%. So we now eliminate the need for you, the Canadian company, to have any cash collateral in that equation. The banks love that mechanism because we are guaranteeing it 100%. So there's absolutely no risk to them, nor do we share in any security or any type of asset that they have as part of your security package. And it typically works very well with the Canadian companies because at the end of the day, we're backstopping this facility. But really, it's just a handshake between us and you, the Canadian exporting company. So we tend to look at the opportunity that you have, the market that you're going into, and the specific ask. But we have then the ability to encourage the bank to open this type of instrument or facility. In agri-food specifically, we've seen it happen where a lot of Canadian companies are using co-packers outside of the country as part of their operations. Co-packers often may or may not require something called a supplier bond. And this supplier bond will open up better terms to you from your co-packer. That's another instrument where we have the ability to provide 100% backstopping. So if your co-packer says, in order to get better payment terms or better terms, we're going to have the request of a $100,000 letter of credit, again, EDC can come in here and backstop that 100%. The next slide goes into our financing options. Now, I mentioned that we are not a bank, nor are we a lender, and we don't want to be seen as one, but we have the ability to enhance the bank's capabilities of lending. So on the next slide, typically how this works is we have the ability to provide a partial guarantee on a lending facility that your lender is looking to do. It's quite flexible, and the solutions that we can provide vary. Typically, we see this request coming to us for an operating line of credit. However, it can work for pre-shipment WIP WIP facilities, work in progress facilities, operating lines, foreign affiliate or subsidiary financing, and especially relevant when there's inventory outside of Canada where the Canadian banks can't recognize on that security. At the end of the day, how that looks like is you will engage with your bank and say, I'm XYZ company in BC, I'm exporting my product to the UK and I need to get access to more capital. The Canadian banks will want to support you, but they may have some hesitations given the fact that you're exporting. And so they come to Export Development Canada and ask for a guarantee. We typically guarantee 75% when it comes to working capital solutions. And that helps the banks get a little bit more comfortable in lending money to their companies. We do a lot of the due diligence in terms of assessing the market that you're going into again and looking at the opportunities that you have within that market. But at the end of the day, we provide that guarantee to the bank, and the bank is feeling a lot more comfortable in lending out money. In instances where there is foreign inventory or foreign acquisitions or financing foreign affiliates, we can go up to 100%, so completely eliminating the bank's risk in those situations. If we go on to the next slide, this program is called our Export Guarantee Program, and it's a very common program for the Canadian banks and credit unions to utilize. It's important to notice that it is a risk-sharing mechanism, so we're not taking all the risk under this particular program. It's very flexible in terms of what type of lending facility you may want. So it could be a CapEx facility, maybe it's a short-term shred facility, maybe you're experiencing seasonal growth and you just need an increase on your operating line for 4 months. All those scenarios are scenarios that we see quite often and are able to provide support. Our risk appetite for business outside of Canada is where the strength of EDC lies. We have that network that's going to really bring in that relationship and make sure that not only you, the Canadian exporter, but the Canadian institution that you deal with is feeling comfortable and supportive of your export adventure. If we go to the next slide, the third bucket I mentioned is market intelligence. And much like other government partners, we have the ability to provide you with introductions to buyers, intelligence on certain markets, and provide commentary on some of your questions and concerns. On the next slide, it shows you that we do have a knowledge solution department. And this department is often issuing or conducting seminars online, hosting sessions by our senior economist or chief reps in other countries. At the end of the day, really being an advisory service piece. And if you go to edc.ca, you can create a profile under My EDC and flag all the information, seminars, articles, white papers that you may think are relevant to your industry, and they'll get sent to your email inbox, and you're notified of things that are relative to your sector. On the final slide, knowledge solutions. Again, we collaborate with other institutions. In this slide, it's outlining our relationship with FIT, the Forum for International Trade Training. But we also do rely on other partners as well, such as Global Affairs Canada, the BC Provincial Government, NRC, National Research Council. So the entire ecosystem is speaking to each other. At the end of the day, we sit down and want to make sure that we're collectively meeting the needs of our Canadian and British Columbia exporting businesses to ensure that they remain sustainable and are continuing growing their brand on the global stage. If there's any questions, my contact information unfortunately did not get through, but I'm sure Gunna can share that with the audience. On that note, I will wrap up my side of the presentation, and I thank you for your time. And again, please do utilize myself or my colleagues on the mainland as part of the toolkit you use in growing your brand outside of Canada. Thank you so much.
Thank you very much, Chris. Thanks for this great presentation. We'll definitely share your contacts with the audience after the webinar. So now we'll be moving into the Q&A session, and I just want to encourage you to send any questions that you have to the presenters in the question pane in the GoToWebinar question panel. And I hand it over to my colleague, Ben Koliznik, for the Q&A session.
Thank you very much, Gunna, and thank you, Chris, and to all the presenters for all of those informative presentations. As Gunna said, we're now going to move into the question part of this session, and we're going to begin with the questions that have been posed during the presentations, and then if we still have some time, we'll move into some of the questions that were provided at the time of registration. So the first question that I'm going to pose, and I think I will pose this to you, Gunna, if you want to stay on there, is related to someone who is looking to import turmeric from Belize and then export that into the UK. So is there anything that you can say with respect to potential tariffs that might apply and under which agreement that might come from?
Yeah, sure. Thank you, Ben, and thank you for the question. So for the turmeric coming from Belize first to Canada and then to the UK, you'll need to consider several things. So first, the tariffs between Canada and the European market under the CETA for this product, for turmeric paste, are zero, provided the product can be proved as originating in Canada. Now, as the product is imported from Belize, it has to go through a certain transformation or processing in Canada to be able to get this added value that would qualify this product as being processed with enough of local content as being processed and originating under the rules of origin in Canada. So we can look into that, and as I've mentioned in my presentation, those rules are specific to each product and specific to the agreement, so I don't have them on the top of my head for this turmeric paste, but I can look them up and can follow up with you after the webinar. And there is also one mechanism that I wanted to mention. There is an opportunity to apply for advanced ruling under the CETA, and I believe also under the UKCA agreement. So this advanced ruling will provide you with the binding information from the customs authorities from the UK or from the EU markets regarding the origin of your product or the tariff of your product, if you are in doubt, of course. And this is a very efficient tool. And once you receive that advanced ruling information from the customs authorities, it will be valid for your subsequent shipments of your product. So we can follow up on that, definitely.
Okay, thank you very much, Gunna. So can be complicated in some cases when it comes to rules of origin, but we can definitely walk people through those rules, and please connect with Gunna directly to discuss those. So the next question is related to trends in food and spices, and I wonder if I could pass that over to Melissa and Rupert to address in the UK, trends in food and spices.
Yeah, hi, I'm happy to have a go and answer the questions on trends. I think in the UK, certainly trends are moving in the health and wellness direction. I think like other markets with COVID, especially in the last year, has increased that trend. We're seeing opportunities for products that offers solutions like in the keto product, for example, low calories, free from, allergen-free solutions in ingredients that offer salt or sugar reductions. In terms of products that also maybe trendy in the market is anything that's clean label. People seems to want to be able to read what's behind the packaging, understanding what the ingredients are. And then certainly one of the biggest trends we're seeing here is veganism, flexitarian, as they say. So this is playing really a key role, and for example, spices and ingredients are really having opportunity in this space because they're really adding to the flavor of the either the meat alternative that are being created. So spices and ingredients definitely part of the development of food technology for the vegetarian veganism in that space. And then another thing that is quite important to keep in mind is that, well, the UK is very competitive. It's a very sophisticated market. So Canadians, for a UK company, it is easier to source from the EU. So to have a proposition that will make someone wants to import from Canada, the products needs to either be different, either quite often Canadian fits in as a niche, in a niche market, have innovative solutions, something that's not, if it's not found in Europe, even better. And then another trend that I would really highlight is sustainability. Anything that would be from sourcing all the way to the supply chain, the packaging, every aspect of the sustainability will be looked at by any buyers. So yeah, definitely. And then maybe on the spice as well, anything that's, again, on the health side of things, where anything that is in immunity boosting spices will also be in trend. And but again, happy to take the discussion offline and offer maybe more market information for any specific companies that wants to know more about the trends in the UK for spices.
Great, thank you very much, Melissa. The next question is, what is the situation for Canadian exporters of vodka and whiskey made in Canada to the UK? And I believe we received a similar question through the registration process related to gin and vodka. The question there was how have things changed when going into the UK since Brexit? So I don't know if that's something I can pass back to you again, Rupert and Melissa, to address.
Oh, hello, hi. Yeah, certainly. In very general terms, the good news is that it should still be the same. So if you are exporting to the UK as part of the European Union before the end of last year, then the TCA now should cover you for exporting into the UK. It will still be worth checking customs VAT requirements, for example. So the processes that you had to go through to export will now need to be UK specific, but the requirements should not have changed. I think we're going to be saying this a lot when it comes down to individual specific products. Best have a word with us offline, and then we can either advise or connect you with someone who can deal with your specific product. But I think the two key messages there are fundamentally, yes, continuity, but potentially with just some procedural adaptation to the UK specifically. Thanks.
Great, thank you very much, Rupert. The next question I will send over to you, Chris. And there's a question here about how EDC can increase access to working capital. And I think you discussed this during your presentation. So I'm not sure if there's anything else you want to say there. And there's another question just about the application process. And again, I think you spoke to that. But if there's anything else you want to add to that, maybe now is a good time.
Yeah, no, thanks, Ben. With respect to access to working capital, absolutely something we can help with. The conversation, can either start with myself in conjunction with your bank. So reaching out to me directly would probably be the best start, so I can have a conversation with you. And then we can engage with your bank and talk about what that looks like and how we could move the needle in terms of providing some guarantees to them to get you access to that capital.
Great, thank you very much, Chris. Again, I would encourage the attendees to contact the presenters directly with any more specific questions. There's another question here related to this session and whether there will be any further webinars for other provinces of Canada. And I guess I would just say that we are British Columbian trade officials, so our focus is on BC. But I do know that I know that our colleagues in other provinces do put on similar sessions, and so I'd be happy to connect with this person offline just to get them some information on other province-specific sessions. Those are the questions that came in through the session. Again, feel free to continue to pose those until we're done today, and I can go back to them. But I'll just go back into some of the questions that were received during the registration process. The first one here is information or updates on entry into the UK for fruits such as BC grown apples, strawberries, cherries, blueberries, and possibly vegetables like prepared salads. Maybe I will just throw that out there and see if there's anyone on our panel who would like to address that.
Thank you, Ben. Thanks for the question. Oh, I see Melissa is there as well. So as I just wanted to say that as Rupert said, continuity is the main theme of the UKCA agreement, and essentially the procedures that were in place should be the same, but with the caveat that they will be applicable to the UK market. So some preliminary research that we've done on that shows that there is a need for phytosanitary certificate when shipped to the UK, when you ship the fruit, veggies, and salads to the UK, and then select fruit and veggies, they also need a certificate of conformity for the market. And as I mentioned during my presentation, some of you asked the question about the systems approach towards the fruits and veggies that originate in Canada and are shipped to the UK market, whether the systems approach that was implemented by the European Union, whether it will be in place for the UK. We are looking forward to the response from the Canadian Food and Inspection Agency. We've asked that question to them, and we are looking forward to their response, and we'll share it with you for sure. So, and I think Melissa has something more to add.
Thanks, Gunna. Yeah, you covered what I was about to say. Maybe just adding that it is complex, so not all fruits and vegetables will need a phytosanitary certificate. For example, most exports of fruits and vegetables are frozen. They're exported from Canada, so therefore these don't fall under the same regulation, and then I think we can see how it can get complicated or quite complex. And maybe just a little last thing to add is the main challenge we've been hearing is around the phytosanitary products that are leaving the UK for Europe. These are now treated as a non-EU third country, and they're now subject to inspections at the border. And that also contributes to logistic challenges post-Brexit between the UK and the EU. So again, I think the message is the same requirements from Canada into the UK, but challenges from UK into the EU as they now require new certifications and inspections. So yeah, that's it.
Thank you very much, Melissa. I'm going to shift gears now. We had quite a few, well, several questions during the registration process related to identifying and connecting with customers and distributors and wholesalers and so on. So we had a question specifically on wild mushrooms and looking for customers in the UK, as well as wine and spirit importers and wholesalers and retailers in the UK. Who can carry the BC portfolio of spirits. I wonder, Rupert, if I know this was touched upon, but if there's anything else you might want to add to that in terms of the role that your team plays with respect to this.
Yeah, simple answer is thank you very much for the question. That is where we come in. In terms of connectivity to buyers, distributors, or potentially if there's sort of legal or accounting needed, suggestions to potentially useful sort of contacts for you. We can either come up with ideas, work with you on what you're looking for to come up with ideas, or where we know direct companies potentially make introductions. Obviously, that's dependent on our level of connectivity to who you're looking for. Very helpful if you are already clear on who and why you're trying to get in front of them. So if we do know them, we can work that way. But if not, then that's okay. We can talk through that. And one of the aspects that we do look at when working with BC companies is obviously if you know you're set on the UK, then that's great. But if you know you're interested in the European market but not quite sure where or how, then we can talk through which parts of the European market or single part, often if it's best to start in one place, is the best beginning point for you, whilst CETA applies to the whole of the EU, and the EU fundamentally is one market. Obviously, many different countries, cultures, attitudes, and so on within that, which can immediately make things either succeed or not, depending on where you choose to go. And we can sort of at least talk through the thinking on that. The only addition I would add is before reaching that point, though, where you're in touch with us about where, how in Europe and who to get in touch with, obviously great if you have been in touch with Export Navigator or with any other sort of assistance to make sure you are at the point at which you're sort of sound, prepped, planned, and know what you're thinking about. Or if you've been exporting to other markets elsewhere in the world, then you're ready, you sort of know about it and are good to go. But sorry, longer answer than I anticipated. The answer is yes.
Great, thank you very much, Rupert. We've got just a couple more minutes. There are a couple of questions here related to beer, which is a favorite topic of mine, so I had to get these in. One of them is just what is the craft beer market like in the UK? And another question that came in, which may need to be taken offline, is maybe a little more technical, but it's related to how someone can get Canadian-grown hops into the UK. So I don't know, Rupert, if you want to start, or Melissa.
Sure, we'll both see what we both bring to that one. I'll do the first part if Melissa, you're okay with the second part. So craft beer. I'm not speaking from figures, I'm speaking from observation. It's a shame one of our other colleagues isn't on here who's well versed in that. It's an interesting market in terms of both creativity, but I think more important in terms of the questioner's interest in terms of consumption, in that obviously it is still fundamentally an experimental and beer loving nation. So I think it's certainly, the UK is still one definitely worth looking at. The challenge would be distinctiveness. There's definitely a fondness for Canadian branding on a lot of goods. So I think there's a sort of an instinctive acceptance and willingness to look there. The issue is then how do you get into the market and through which channels, which, as I say, depending on the product, we can talk to. One last thing I should have mentioned when I was talking just a moment ago is the range of help we can give is definitely there, and we're open to discussion. I don't want to raise expectations about business development though. So those pointers, ideas and connections, definitely. in terms of business development, at that point, obviously, as I'm sure most of you would expect, it's over to you. But definitely happy to have that specific discussion. I think the UK could be of interest there. Sorry, Melissa, anything else you want to add?
No, maybe just a quick point on the second question, the how to import export hops products, and essentially it's the same. So from the 1st of January 2021 until the end of this year, there is a transition, if you want, so the same process applies. So you need a EU attestation of equivalence document, and that can be used again until the end of the year. And then from January 2022, it will be a very similar document, but a GB Great Britain version of the current EU document. And there is, in Canada, there's an authorized agency that will issue those documents, and they're based in Ontario at the Agriculture and Agri-Food Canada. And then if you do need support with connecting with the agency in Canada, again, that's something we can assist and to facilitate you getting those documents in place. But essentially, same as we've said before, the continuity of trade is the same, and by January 2022 it will be a new version of the document.
Great, thank you very much, Melissa and Rupert. Our last question I'm going to send to you, Nicole, if you're still with us, and it is it's about the UK's new trade policy with Canada, but which you've spoken a little bit about, but also with key trading partners like China, Southeast Asia, or the USA. I wonder if you might just say something about that.
Yeah, absolutely. So, I mean, I think one of the sort of side effects of our departure from the EU is the fact that we can look much more globally and not be bound into trade agreements that have 27 other partners with them. So we do have a very ambitious trade agenda. We are currently talking to a number of key partners, such as Canada, the United States, about implementing those free trade agreements. But we already have many, many free trade agreements in place. I don't have the figure off the top of my head, but it's quite impressive as to how many we've actually secured. So we've secured a major trade deal with Japan, with Serbia most recently, with Vietnam, with many other countries. So we're taking a very global perspective, and I think the fact that we're seeking to join CPTPP really speaks to that as well. So, I'm very optimistic about where we're heading on our trade policy and trade agenda, and I think what we can see from the UK is a much more globally focused and ambitious trade agenda than we were possibly able to maximise being part of a group of 28.
Thanks very much, Nicole. We are all out of time. If your questions were not answered today, I apologize. Please know that someone will be following up with you directly to discuss those. Thank you very much, Consul General and Rupert, Melissa, Chris, and Gunna, and thank you everyone for attending today's webinar, Trading with the UK, What Now? Post-Brexit. If you have any other questions, please contact us at the contact details that you can find in our presentations. I think Gunna mentioned you will receive a follow-up email with a link to view today's webinar, a recording of today's webinar, as well as PDF files of the presentations and a survey. And we would really appreciate it if you could complete that and provide us with your feedback. On behalf of the BC government and our speakers, thank you for joining us today, and have a great rest of your day.